Hello, my name is Maria Bezubova, and you're at my channel, Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is June 17, 2024, and it is a weekly markets update. So let's have a look at the news of week 24 and see what are the next trends. First of all, let me say Eid Mubarak to all my friends and colleagues. This week starts with holidays for many countries and producers, so it will be a bit slow, but previous one was definitely not. Egyptian urea production keeps to be the newsmaker in the market. Gas supply to Egyptian producers just started being restored in the very middle of the week, but it turned out to be just a hope. Abu Qir reported to partially restart production. NCIC, EFC and MOPCO also were rumored to operate at low rates. But the uncertainty is still there. Gas imports from Israel still is limited, and there are no clear prospects when it will be fully restored. At the same time, temperature continues increasing, and demand for power generation as well. Massive LNG imports will start arriving only in July, so perspective for the industrial consumption looks quite gloomy. From the other hand, Chinese urea producers still remain out of the market, with no custom inspection planned. However, domestic prices in China dropped this week, following the news about inspection hold and also with the domestic season approaching its end. Thus, there is a hope that China will resume exports at a certain point, but no clear signs we see yet. Also, there is no information about timing of potential Indian purchase tender, which still is expected sometimes in July-August. In this situation, producers from other regions are happily selling out July volumes, thus prices in the market moved higher again. Sales in Egypt reached $355 level, and indications even higher than that, $360 level. AG producers moved indications for July up to $345-$350 level. Iranian producers made to sales at $303 FOB level, and some of them are already targeting higher than that. Black Sea offers circulate at $335-$340 FOB level. Prolonged urea season in the US due to weather conditions push inland and river prices as well. Most of the producers across the globe are well committed for July, and this supports the price level. This is quite an unusual situation when in this point in season price dynamics is bullish, but seems like Q3 will be much more bullish than we thought before. Paper markets moved slightly up as well, indicating price level for June between $350 and $360 FOB for Egypt, for July $345 to $350, keeping similar level for August at $340 to $350 FOB. Same tendency for NOLA and Middle East. Rally in urea pushed prices in ammonium sulfate segment too. The other reason is high demand for standard Capro grade product from domestic Chinese compactors, who anticipate active purchasing from Brazil soon and build stocks for compaction. Thus, prices moved up to $145–$160 FOB China for standard grade and to $170–$180 FOB for granular. In Brazil, prices hit the level of $200 CFR, and main purchasing season yet is to come. In the nitrate segment, general bullish market sentiment is also confirmed by Yara raising pricing for the northwestern Europe for August delivery for both ammonium nitrate and calcium ammonium nitrate. CIN price is up by €10 to the level of 270 euros, and price by 13 euros. This round of price increase is already the third one since new season prices were issued a month ago in May. Indications of Russian AN from Baltics also increased following urea and ammonium sulfate prices corrections, and taking advantage of the fact that Brazilian buyers accepted higher levels. Phosphate prices are also growing, partially due to rapid increase in nitrogen and partially due to own fundamentals. MAP price to CFR Brazil hit $605 level with the latest sales of Russian product. Seems like Brazilian demand is far higher than potential supply, and delaying purchases in the hope of lower prices in front of soybean 24-25 season sowing turned out to be a bad idea. DAP prices firm across the globe. North African producers seem to be well committed for July with very limited, if no at all, availability from any producer. Thus, some limited spot sales this week happened at plus $10 to $20. Indian demand is firming with monsoon season breaking in. Indian government was formed after the elections and the new Minister of Agriculture was appointed. Now importers await from the new minister clarity about subsidies levels for phosphates for upcoming season. There are 2 tenders for DAP supply now in place, closing last week and this week, but purchases for July and onwards will only to emerge. Also, Bangladesh Ministry of Agriculture issued a private sector tender for phosphates and other products, mentioning 500,000 tons of DAP and 200,000 tons of TSP, closing on the 4th of July, with shipping window from end August to end September. Clearly, such significant demand supports bullish price trend as well. Moving to the fundamentals. European natural gas futures increased toward 36 euros per megawatt hour, nearing a 6 months high due to concerns about LNG facility outages. Repairs at Australia's Wheatstone gas facility have halted production, affecting global LNG supply. And now Europe competes with Asia for LNG volumes, where demand is high due to a heat wave, not even mentioning Egyptian abrupt demand spike. The other factor is concerns about Europe's progress in refilling gas storages for the winter. Gas storage injections have slowed, and while storage levels are currently strong at 72%, there is an anxiety about future supplies, especially with potential losses of Russian gas after 2024. Thus, competitiveness of European fertilizers production is again threatened. So abnormally high off-season values help Europe continue operations. In the US, natural gas futures dropped below $2.9 per MMBtu after a federal report showed a weekly storage build. US utilities added 74 billion cubic feet into storage last week. The report also showed US gas stockpiles are 24% above their 5-year average, so the rate of storage increase will decline. Agricultural commodities markets were eagerly waiting for the USDA report issuance on June 13. After it was out, wheat futures showed a slight upward trend, trading around $6.2 per bushel after dropping to a 6-week low of $6.1. Analysts have reduced 24-25 harvest estimates for Russia by over 10% due to frosts and continuing droughts. Also, production were reduced for Ukraine by 1.5 million tons due to hot and dry weather conditions, and for EU by 1.5 million tons, specifically France, due to prolonged wet weather. In contrast, the US shows signs of a strong crop, showing the best crop conditions in 3 years. Thus, US experts' forecasts are increased amid more competitive export price expectations. High expectations for the harvest in Canada, Australia, and Argentina support downward price corrections of last several weeks. Corn futures climbed above $4.5 per bushel, rebounding from a 6-week low observed in June 5th, amid uncertainties surrounding US corn plantings for 2024. Analysts in new report anticipate lower production in US, Russia, and Ukraine in the upcoming season, soaring the supply outlook. Additionally, pest issues are affecting corn production in Argentina. Thus, prices reacted and corrected upwards. Soybean futures were below $11.8 per bushel in June, the lowest level in nearly 6 weeks, amid expectations of higher supply and steady demand. In the new report, the beginning and ending stocks in the US for the upcoming 2024-25 marketing year were upwardly revised, as lower crush forecasts lifted expectations on the domestic inventory. Supply was also supported by the good quality of USDA's oilseeds ratings. Additionally, China, one of the largest soybean importers, is increasing its domestic supply, driving prices further down. The developments offset the expected downgrade to Brazil's stocks, being reduced by 1 million tons due to the in-country assessments of flooding in Rio Grande do Sul state. Moving to the shipping industry, where indices increased this week again. Prices for containers continue to grow amid continuing disruptions in the Red Sea, with no hope for resolution soon. The Baltic Exchange Dry Index was up to its highest since mid-May level. This was driven mainly by demand for Panamax and Supramax, while Capesize Index dropped. The index recorded a weekly gain of 3.6%, marking the third consecutive week of increases. To sum up, bullish trend in all key fertilizers markets is mostly cheered by uncertainty with Egyptian urea production. A purchasing season approaching in India and Brazil adds fuel to the fire. However, agricultural fundamentals continue to be unsupportive of long-term stable upward price trend. So let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, and see you soon.